Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome, and make sure you hit that like button and subscribe. So as always, let's jump right into it. Today we're actually looking at gold. Okay, this gold is setting up for a really good trade, I think, for longer term, right? Maybe a couple days, couple weeks to a couple months, right? Especially with everything that's going on in the economy, with the Fed and all that printing money. Just crank that money machine. Let's make money out of thin air, okay? And that's why we're seeing gold in a bullish thing. It's been like this for probably the last year or so. So there's a couple patterns. Let's jump right into it and let's give you guys some levels. Okay, first off, we have a inverse head and shoulders, okay? Right here. We have the neckline, and this is called a slanted inverse head and shoulders. Shoulder, left shoulder, head, okay, and right shoulder. Or we could say this is also the right shoulder, okay? However you want to look at it, it's all the same thing. If we do this, we could say this actually was the neckline, right? And this is our right shoulder. So we'll draw a couple different fibs and see if we get confluence, okay? This is a bullish pattern. Second, we have what's called a cup and handle, okay? And what the cup and handle is here is the cup, right? We kind of look at this as the cup. We could look at this move as the handle, and now we're starting to break out, which is also a very bullish move. So we have multiple things setting up, which are multiple kind of patterns they're setting up that are all bullish, okay? So how high is gold going? I have no clue, but if we duplicate this trend line, just the tip and trick, bring this down here, we now have the lower end. Now, there's really not much room to run. We're looking at probably the 170 level on GLD, okay, until we find resistance. But because of this inverse head and shoulders and this potential cup and handle, right, here's our teacup, right, and then the handle, and then we're starting to break out. All this might produce so much energy, and also with the market, if the market does roll over, maybe people pile into gold and they start taking profits and taking money out of the overall market. Okay, these are things that potentially can happen that could literally shoot gold right through this and not even care about this trend line, because we've done 1, 2, 3 hits, maybe on the fourth one. With all this energy, we just kind of blow through. Okay, now let's look at some targets. I'm going to grab my Fibonacci Extension tool. First thing I'm going to do is I'm going to go from this low, okay, to this neckline right here, okay, because we could see neckline here, and then bring this all the way back down. And look at this. We actually rallied right to the 127, okay, and then we pulled back. We're right back here. So 73 is 1618, and also the 200, okay? I can't make this up. The lines are what the Fibonacci extension lines are what they are, okay? Now, let's look at this bigger head and inverse head and shoulders potentially, right? Let's kind of activate this, and let's say this is more of the shoulder and this is the neckline. Okay, so let's grab our Fibonacci extension tool, go from this low all the way up to this high right here, and then all the way back down. Wow, look at this. Look at how perfect. When I draw that, the 1618 from this matches up with the 127.2 here. Then we have the 1618 of this bigger leg matching up with the 200 here, which is around 182. Okay, this level is around 170, we'll say 173. So we now have a couple confluence levels right here. And then finally, the ultimate target is 193.37. Well, if we go back, and let's go back to a really, really long time frame, right? Let's go back 20 years. Remember that 1900 level. Look at this, okay? Right up here, okay, this 193 is right up around here, actually a little beyond it, but look at this. This 1618 with the 200 from this, it takes us right back to the all-time highs of the 184, 185 level, okay, of back during the Great Recession, right, in 2010, 11, when gold hit all-time highs, right? And remember, this is when MC Hammer was doing gold commercials, okay? I'll never forget that, and that was kind of the top. So if you see MC Hammer come back out doing commercials telling you to buy gold, you might want to look for a double top and short that guy. But with that being said, all we're looking at is what potentially could go. We have multiple levels of confluence here. Okay, we have Fibonacci levels, we have these levels, and we also have all-time highs. Now let's draw one more fib level. Okay, and let's just draw from this cup and handle our fib extension to see if we could find anything here. So I'm going to the lowest peak to the highest peak and then all the way back, okay, to just get levels. And look at this. Our 200, now 127, 161, so maybe we stall as we break out, right? Come up here, maybe if we hit this over the next couple days, right? Next day, 2, 3, 4 days, maybe X marks the spot right here where we have the 161 that actually matches up as gold maybe goes sideways for a couple days, starts to break out and looks something like this, okay? But with that being said, look at where our 200% just from this little move is, right at the 172. I can't tell you enough how important your fibs are. Okay, so these are great trades over the next couple weeks. Hopefully you guys like this gold level, right, of where to look to get long, to get maybe look for reversals, quick little scalp trades for pullbacks. But too many things are all lining up for this market kind of in gold right now. And if it just tells you trade the fib levels and you will probably see great things, great trades and all that setting up over the next couple days to the next couple weeks, I believe. So I hope that helps. Good luck, and until next time, we'll talk to you soon. Thank you.